Imagine putting $1,000 into the market in 1976 and never touching it for 50 years. By the end, you would have either a life-changing fortune or merely a modest return depending on the index you chose. Today, we compare three titans of the US market, the S&P 500, the Nasdaq, and the Dow Jones over 50 years. This is a 50-year investment story about compounding volatility and the cost of picking the wrong leader. Chapter 1 covers 1976 to 1989, a period of inflation and gradual recovery. The late 70s brought high inflation and a slow start for all three indexes. By the early 80s, aggressive policy and a steady economic recovery pushed markets higher. Your $1,000 baseline began to grow slowly across the S&P, Nasdaq, and Dow Jones during this era. Chapter 2 spans 1990 to 2000, the decade that rewrote returns as the dot-com boom exploded. The Nasdaq surged ahead as technology stocks rallied, creating enormous separation in returns. Investors who sat through the 90s saw the Nasdaq pull away by an astonishing margin. Chapter 3 covers 2000 to 2010, a turbulent time of bust and crisis. The dot-com crash sent the Nasdaq plunging and wiped out huge portions of those tech gains. Then, the 2008 financial crisis struck and markets contracted sharply across the board. During this decade, the more conservative S&P and the Dow regained ground relative to the battered Nasdaq. Chapter 4 examines 2011 to today, a decade dominated by a tech-led bull market. Compounding returns and explosive growth in large tech firms propelled the Nasdaq and the S&P to new highs. By the end of this period, your initial $1,000 had multiplied many times over, depending on the index. Now we stop the clock at the present year and reveal the final dollar amounts and percentage gains for each index. The definitive winner is crowned, and the takeaway is clear. Long-term investing and compounding can be transformational. Remember the economic drivers behind each era: inflation and policy in the late 70s, the tech boom, then the crashes, and finally the modern tech resurgence. If you want the exact final numbers and a downloadable comparison table, check the video description for the full data. Investing is less about timing the market and more about timing the market, and that is the most important lesson here.